Hello, everyone. Thank you, Celine. My name is Daniel, CEO Deutsche Handelsbank, and in the next 10 minutes, I try to show you why we perfectly fit into the NOAH community. Basically, this is the reason I just want to show you why probably most of us are here, that even just 10 years ago, there was most of the companies that had actually asset-based business models. And it turned pretty much into tech and e-commerce-based business models, and that we can see even if you look at the most valuable companies in the world. So we had just Microsoft almost 10 years ago. Now they are just tech companies you see as the most valuable companies in the world. And even you can say Berkshire Hathaway has got also quite a big share of Apple. And the good thing about us is that we just were founded a few years ago, 2009, and went live 2010. So with all this tech development, these kind of digital-driven business models were perfectly for us because we just cared about these type of business models. And so actually you see it when some of our clients we actually did the payment as former sister company of Sofort's Advising, you probably know, and then started to finance these companies that were really growing very fast and that had a different financing need than traditional businesses. And these are our four verticals you see in here. Actually, the one on the very left side, from your point of view, is the payment. We started that in 2010, as I said, a sister company of Sofort. And what we do there is basically we do have a business account, do reconciliation, direct debit, and separate credit transfer, and we work together with all of the PSP businesses and some merchants. So nothing special there, but the specialization does work. Why? You can see we already have a transaction volume of 40 billion right now and roughly 100 million transactions, which is quite okay, regarding the small company we still are and how young we are. But it just doesn't help on the provisions. It's a very good thing because it helps us for the left-hand side, the loan business. Why is that? It helps us with risk management, and most of all, it gives us a lot of liquidity. So you can imagine, out of 14 billion, there is always some money left on the account. And so that's what we actually started, and I will go first to the growth financing, the core business, what we're doing on the loan side. We have actually started that 7 years ago, so when we became aware that Sofort might get sold to another company, it was at the end Klarna, we thought, well, having a fully licensed bank and just doing some transactions is probably not worth it. So what we've seen, but like the focus on these digital companies was that these companies were growing very rapidly and they needed liquidity to become as successful as they could be. And what they did at that time, of course, they took a lot of venture capital. And we were just asking ourselves, well, you see an equity debt ratio in all of the normal as in traditional businesses, normal SMEs. Why not going into these companies, looking at really good KPIs and helping them, the new type of SMEs? And therefore, in the beginning, we had like companies, e-commerce companies like Home24, Outfittery, Rebuy, Westwing, Mr. Specs, and that's where we started 7 years ago. We have actually just two simple products. It's an overdraft facility and an amortization loan. Most of the products we offer are actually the overdraft facility. And very important, we do not offer venture debt. So there are no strings attached. It's a typical loan. It's basically what you know from your private accounts. So it's just a 3-pager, no equity kicker, no warrants. We have so far tickets from 500K to 10 million that we give to every single company, starting at the Series A. And so far, we have, in this area with the digital startup and growth companies, 100 clients. Of course, we intend to grow there heavily with a credit volume of altogether 200 million. We have also two other things that's just quickly about that. It's banking as a service. That's what we did from the beginning as actually a sister company of Support. And there we work together actually with a growth financing plus approach, meaning we give the banking license and we do refinancing. Why is that important? Well, there are some companies that do not really fit into our way to do business, where we just say, well, we can't do it ourselves, but we find it very interesting that these marketplaces get a banking license and financing. And there we're looking actually at marketplaces that have the potential to become 20, 30, 40 million plus on the financing side. And last but not least, we have the FinTech banking. We just started as a startup in the bank, where we basically said, well, all the disadvantages you have as a fully regulated bank is here an advantage. Why? We do have a banking license. We do have liquidity due to our payment transactions, and we know how to build up a bank. So actually, we are able to offer that for 5 to 7% and do it very quickly. I will not talk much about the scalability, but we started it just 10 months ago. And we reached, with a ticket size of 50,000 to 250,000 K, a credit volume of 40 million. And we did it with 4 people. So you can't do it with 4 people if you're not scalable. That's actually the main reason probably why we are here. We have a lot of companies. We love to actually join VCs and fast-growing companies at the Series A level. We love to work together with the VCs. Why? The way we do the loan is actually very good for the founders, for the management, and for the VCs being in there. Why? It is just scalable and there is no dilution. So liquidity for very fast-growing companies is key, is one of the main resources, and we can provide it with our simple overdraft facility. And as you've seen, it worked quite well so far. However, just to show where we are today, but where we need to go. Today, we have a loan book now of roughly 300 million and transaction volume of 40 billion. What we do quite well is transaction business, obviously. We grow by 20–30% year on year. Growth financing is also working quite well. So just to give you an imagination, I think over the last 12 months, we had 80 million new credit lines out there. So it's, for the German market, quite substantial. And in 2018, we also became profitable, because one thing you shouldn't forget, we are also a very fast-growing company. So that also helps us in talking to our clients. And where we need to go is, we want to very rapidly go over the 1 billion line for our loan book. We want to really help these digital startup and growth companies, together with this VC industry, to grow even faster. So if you see and think how much VC money goes in, there's a lot of room for debt, a lot of room for leverage. Just like the traditional SMEs, I think the new SMEs should get there as well. So what do we have to do for that? Well, payment is easy, just renting a server. Loan book more difficult. There we want to increase the loan ticket. That means we want to grow with our clients. We think customer lifetime value is very important. We also want to go to different markets. We are mainly now in Germany, Austria, and want to go now to Benelux. And last but not least, we want to expand our product offering. So right now, we are very simple. We just have the overdraft facility, and for our buy and build strategy, amortization loan. But we also know that with the companies that made a revenue of 20 million now, and doing maybe in the future 100, 200 million, there needs a certain and different offering. And finally, that's also why we think we are very well suited with our focus on this industry, that we also help the VCs grow. So hopefully for the NOAH London, we can talk more about GP financing and capital calls. Finally, I think if we achieve that, what you see here on the slide for the next 2 years, we are a little bit closer to becoming the bank for digital startup and growth companies in Central Europe, because that's what we strive to do. Thank you very much.